What is an escrow or impound account, and do you want one? When you get a mortgage, you may be required, or at least you will be given the option of setting up an escrow account that facilitates the payment of your property taxes and your homeowner's insurance. An escrow account may be required when your loan to value is high, generally above 90%. Otherwise, you can choose. An escrow account can make saving for your taxes and insurance convenient because those payments are added to your monthly mortgage payment, making it easier to put aside the money that is paid annually for your taxes and insurance. Make sure it's there. The question is, if not required, do you want an escrow account? Hello, my name is Selland. I'm with Signet Mortgage, and in this message I'm going to talk about escrow or impound accounts and the benefit of having one and things to pay attention to if you choose not to have an escrow account. What are the benefits of an escrow account? Well, to start with, I have an escrow account. It works for me. I do not want to think about a tax bill or an insurance bill that I didn't think about or plan on. With an escrow account or impound account, my housing costs are the same month over month, and with an automatic payment, I'm all good. I don't think about it. For me, the numbers are not big enough to bother putting those funds in a savings or investment account or something like that and managing when the payment is due. Having an escrow account can be convenient. All you have to do is make your full mortgage payment, including the impounds, each month, and your lender takes care of putting the necessary funds into escrow and paying out of that account when your bills come due. If you want to forego an escrow account, you need to plan accordingly and set aside funds so you can make the semi-annual or annual tax payment and insurance premium when that becomes due. If you have an escrow account, your annual insurance premium and property tax bill will be spread across 12 equal payments and included in your monthly mortgage obligation or your payment, and in addition to any principal and interest that you pay on the mortgage itself. Your lender will take this part of your payment and put it into an escrow account and save for when those bills come due, at which point they'll pay them out of the escrow account on your behalf. This setup is beneficial to both you and the lender. Escrow accounts protect the lender by ensuring that your taxes and insurance are paid and don't fall behind. The benefit to you is a peace of mind knowing that those payments are set aside so you don't have to worry about it, worry about making those payments in one lump sum. An important consideration when choosing to have an escrow or impound account would be the extra funds due when it's initially set up. Since due dates for taxes and insurance will vary, it will be required to come up with an initial deposit when you close your transaction. For example, if you're very close to your tax bill coming due or a payment, you have to put up 3, 4, 5 months of the tax liability into your escrow account up front. Then the lender has enough to pay when it becomes due. Thanks for watching. This is Selland with Signet Mortgage. And if you or someone you know is looking to buy or refinance or just get questions answered, please contact me at the email, phone number, all that stuff that's down below. And I'm looking forward to helping you get into the house of your dreams.